Hi.
Hi.
What are we talking about today?
Gold.
Teach us.
I know everything about gold.
So we
should
talked
listen to
about, probably a couple months ago, we talked about gold a little bit in the Bible. And we talked about
that's
that
right.
side of things. And I want to share today why I'm buying more gold. And one chart in particular that completely changed my mind about gold, because so I've been investing in some form or fashion for probably 16 or 17 years and didn't buy any gold really for probably 12 years or something. And just always thought like, oh, what's the point? Like, I just didn't see any value in it, in investing in that. And then I bought just a little bit as a hedge, just as like, I just want to invest in something that,
You just like the idea.
acts different in the market, But I ended up, a couple months ago, just having change of heart on gold for one particular reason that I'm going to share in this podcast. That's what we're going to talk about. So
Now you have a heart of gold.
yeah, there you go. Exactly. So I would say at our peak, maybe 5% of our investments were in gold. But like I said, the only reason I really did it, I wasn't really interested in doing it, was mostly just because I thought, all right, this is what a balanced portfolio looks like.
Oh.
It has some gold, it has some stocks, it has some bonds, and it's kind of, and a couple other things. And
Do you still agree with that idea?
I don't know. Like I don't know. But I do want to share, I want to share this chart though, because I think this is really interesting. And like anything like this that we're talking about, where I'm talking about stuff like this is not financial advice for anyone.
No, you would never.
But what it is I like sharing what we're doing, and sharing why we're doing it in case it might be helpful to you on your journey. And so it's not specific financial advice for you to do, but yeah. So I found this chart. I'm going to go ahead and share this here.
Just more of like a peek into what we're doing and how you're thinking about things.
Yeah, exactly.
Yeah.
So I found this chart that basically broke down the comparison of gold and bread. And what I mean by that is how much gold it takes to buy a loaf of bread right now, 100 years ago, and thousands of years ago. And what's really interesting is that it's actually been really consistent.
Really?
Yeah. And so even though, and I want to read the actual numbers.
What about gluten-free bread?
Yeah. And so when these numbers were run, this was a little bit older, so the price of gold has actually gone up significantly since these numbers were run here. But what we're referencing here is 1 ounce of gold. Like right now, I think last I checked, at the time I was recording, it was $3,300 or something like that, $3,300 for an ounce of gold.
Okay.
But when the numbers here that we've calculated, it was worth $2,600 at that point. And that would buy you roughly 495 loaves of bread at $5.28 a loaf. Okay. Now, what's so interesting about the US dollar is the US dollar over the last 100 years has lost almost all of its purchasing power. Do you know what I'm saying? Like it's gone down in value, the value of a dollar, right? I mean, think about what we could buy with a dollar 100 years ago.
Yeah. Well, yes.
That's my point, right?
Right.
You could buy a house for about $500 or something. Like it was just, And so the point is that the US dollar has lost so much of its purchasing power. And what this means for us, again, like you hear that and you think, if you're like, oh, this is, economist talk, and I don't know what that means. It's like the money or wallet is just consistently losing its ability to buy things.
Right.
I think we all understand inflation,
Right.
to some extent, and how that affects our lives. And it's
Sure.
the same thing. That's exactly what we're talking about here.
Right.
Groceries are way more expensive now than they were 5 years ago, and then definitely 50 years, right?
Yeah. And like a brand new Model T Ford, latest model, best car was like what?
I don't know. I don't know what they cost, but yes, way less.
I thought they were like, no, I don't remember.
Yeah, I don't know. But point is like way less, obviously, right? So
Don't listen to me, guys.
But here's what makes things really interesting. So back in 1913, you could buy a loaf of bread for 6 cents.
In 1913?
Yeah.
Wow. Okay.
You buy a loaf of bread for 6 cents. Okay. And again, like right now, I don't know what the average is, somewhere around $5 or something, right? Okay. So you see how much more expensive the thing has become.
Right.
Right. And so right now, let's say that loaf costs $5, and it's not like the bread has gotten that much better. right? And it's actually probably
It's
way
probably
worse.
much worse.
But yeah.
And they've made it cheaper,
Yeah.
right? Like, haven't they?
Well, yeah. And I mean, and when I say the average price of a loaf, like that's not bunny bread. Like bunny bread's probably cheaper, but you get the point, right? Similar ingredients, whatever. Like if you could make the bread then, you could make it now. Similar ingredients, similar process.
Okay.
And, and there's always variations in this just in terms of like being able to scale something. And so obviously making bread in a factory, you're going to be able to make more of them cheaper. And so this is never going to be perfect, but we're trying to illustrate a point here, right? And so the point is that 1913, the bread cost 6 cents, and right now it costs $5. Okay.
Right.
And the reason why is because our dollars have gotten that much weaker, right?
Yep.
And I think this is what's so interesting to me is that, well, let me show you this here. So let's say you have $1,000 saved up right now. Okay. $1,000. So you could keep it in today's dollars, right? And that would buy you 189 loaves of bread. Okay. So $1,000 divided by 528 per loaf. Okay. Now, let's say that we move up to 50 years from now.
Okay.
Are you following me?
Yep.
Does this make sense? Okay. So based on what we've seen the last century, those same dollars might only buy 10 loaves.
Right.
You follow me? So like right now we can buy 189 loaves, but in 50 years that might only buy 10 loaves.
Sure.
That's the same $1,000, which is crazy to think about.
That is crazy
That
to
bread
think
could be
about.
$100 a loaf
Yeah.
in 50 years, but it's definitely possible based on what's happened in the past. Now, if you convert that $1,000 to gold, this is what's so fascinating about it. It would buy you, again, based on that $2,600 an ounce thing, it would be 0.38 ounces of gold, okay? Which historically, based on thousands of years, should still be able to buy you around 189 loaves in 50 years from now.
Really?
Just as it has in the past. And the reason why is that gold tends to keep its value while dollars tend to go down in value. Okay. And this is all based on the assumption that things continue the same way they have historically for the last 100 years or so. And obviously, as we know, we don't know that's going to happen for sure. But like, this is what is so fascinating about this is, again, if you go back and look at how much it cost to buy a loaf of bread 2,000 years ago, still would be about the same amount of gold that it takes right now to buy a loaf of bread. Okay. With slight variations based on, again, different ingredients, different processes and stuff like that. But the point is, what we've experienced in the last 100 years, from it going from 6 cents to 528, is so vastly different from if you would have had that money in gold.
Wow.
It would be roughly equivalent. So the point is, like this.
So it's holding its value really well.
Yeah, and this is the thing that helped me see gold through a different light, because now I'm like, from a defensive standpoint with our finances, it's getting me to think a little bit more along the lines of, okay, obviously I don't want to put all my money in gold because it's not something that necessarily is going to go up in value forever.
Right. So it's not necessarily
you're going to
multiplying.
Gain. Yeah. Yeah.
Right.
And there are times, because again, like this wasn't that long ago that we ran these numbers at $2,600 and now it's at $3,400 or whatever. It's like gold has jumped up a lot. And as a short-term investment, like you could have made a little bit of money doing that. But I'm not a short-term investor. I'm a long-term investor. I'm thinking in decades, not in weeks or months,
This is so funny.
So, but the point is that in terms of our long-term investment portfolio and in terms of playing defense against worst-case scenarios, financial collapse, whatever, all the stuff, gold has been an asset that has been around for thousands of years and that has maintained its value throughout that time, throughout century after century after century.
Right.
Which I don't understand why, but it just has. And again, back to previous, podcast episodes, it's biblical.
Right.
It's like one of the things we talked about in one of those other episodes is this idea that God created everything in the very beginning in Genesis 1 and said, it's good, it's good, it's good. And then when he was done with that, he said, there's gold and it's good.
Yeah.
There's gold in the land and it's good. It's like, why is that in there?
I don't know. That's crazy.
You know what I mean? Is the whole reason that we all place value in gold is because God said that it's good. You know what I mean? Like fundamentally, even if no one realizes that anymore.
Yeah, or acknowledges it.
Yeah. Like, because why? It's shiny. Like, what is the thing that makes gold have value, But it's held that value for a long, long time.
Wow. Interesting.
And meanwhile, the US dollar, again, like we're saying, has just gotten weaker and weaker and weaker and weaker. And so I guess what this means to me is and I've been thinking about this more and more with Bitcoin too. Like the US dollars, you just don't want to have tons of money sitting in cash.
Right.
Like, because it's just eroding away.
Right.
And
So
whereas
the days of putting it under your mattress are long gone.
Well, they should be, and it's like, and I'm not,
You can do whatever you want.
like
but
we have cash, like we have money sitting in cash and we have some in our house and whatever, like, and that makes sense. There's a purpose and a benefit to it. But at the end of the day, like, I don't see much advantage to having all of your money sitting in actual dollars, when this thing is just, it's like a bucket with holes in it and it's just leaking value over and over and over again. Whereas again, gold has maintained really well. And again, there's fluctuations. It's like at $3,400 and it might go back down to under 2,000. Like it could, like it fluctuates. But from a long-term perspective, just knowing that I could have, a quarter or a third of an ounce of gold that'll buy this many loaves of bread now and that many 50 years from now is pretty interesting to think about or to consider,
Yeah.
So anyway, so the question is, what are we doing with all this information? And one of the things that we started doing, which you may be interested in, it's not sponsored by these guys, but
although if you want to sponsor us,
well, yeah. Anyway, we could work out some deal with them. But I looked around because, like, if you know me, my MO when it comes to investing is to make it automatic. How do I make the one decision with investing that everything happens automatically from there?
Right.
And I don't have to think about it anymore. I don't have to depend on my willpower or anything else. And so I'm like, how can I do that with gold? And there's a couple different places that I found, but the one that I really like that I started using is a website app called One Gold. And what I like about it is you can buy gold with them for as little as $10 and you can do it completely automatically. And so I looked at a few different options and they are my favorite because you can automate the purchases, like I'm saying, like, so I can decide, all right, we're going to contribute $100 a week or a month or $10 even, every month or whatever the thing is. And it just automatically does it, transfers out of my checking account or to it or however you do it. They have the lowest fees of any gold dealer that I found. Because like that's and this is what you find when you're buying gold. It's like you're going to pay a markup over what the actual value per ounce is, and it's like they need to make money on the trade, like so they do, but those fees can be very, very different, and you can end up getting ripped off pretty easily. But they have the lowest fees of any dealer that I found, and then on top of that, you can easily sell your gold back to them at any time, and then transfer your funds back to your bank account.
Oh, yeah.
And then you can also have them store the gold for you, and so it's insured. And then you can ask them to send it to you once you reach a certain threshold. I'm not sure if it's an ounce or whatever, because if like you're just contributing $10, it's like a tiny little speck of gold that you have for $10. But once you get up to an ounce, then it's like you get a coin. It might even be a tenth of an ounce. I'm not really sure. But the point is, they will send it to you if you want them to, or they can just hold it there and keep it insured for you, and it's just your choice. So anyway, this has been something that we've built into our system of automating our finances and everything else like that. And we talk about this in our 10X course with our 10X students, as well as our Mission-Driven Millionaire program. So we're kind of breaking down our entire system with all this, but this is a part of it, of just automating this a percentage of our portfolio to something that we think, I don't know, is a good safety net,
Yeah.
Because I'm pretty defensive. Like, it's funny when people think that I'm aggressive with investing, because I'm actually...
You're
the opposite.
Yeah, you really aren't.
I work really hard to minimize risk as much as possible. And
yeah, you are really, just to give you insight into Bob's personality. Bob is not the type of, well, I mean, like a lot of people hear his story about how he got laid off and started the blog, and they think that means that he's just sort of like fly by the seat of his pants. He is the opposite of fly by the seat of his pants.
Which is what made that such a big faith step. Yeah.
Yeah, it was a huge faith step, but it also made it work with us in our marriage, because he wasn't coming to me like, I think I'm just going to let it go and just not work again. Like, he had a plan in place of like, okay, we will try this. If it doesn't work by this point, like if we don't see these things happen by this point, then I will go do these things, like there was a plan in place of what was going to go on.
Yep.
And so, I guess I'm just saying that because, he's just not a super risk taker. I'm the one that's kind of just like, let's just go play the lottery and see if it works. That's my strategy. And Bob's like, no, like we're going to be calculated. We're going to think this through. And
Yeah. So,
yeah. I think the point is, this is not just you just are guessing.
Yeah. So the whole reason I'm just saying this is just help you understand why I'm thinking this way and why I'm making these decisions.
And you don't know what the outcome's going to be,
of course,
but you definitely have a thought process behind it.
Yeah. And so when it comes to gold, it's like I'm asking a lot of different questions because there's an unknown number of crazy things that could happen in the world and how that affects our finances. It's like we have a massive stock market crash. Like, what if we had something worse than the Great Depression?
Right.
Like, what happens in that situation and what maintains value? You know what I mean? And what are the things that we should be trying to prepare against? And so, and I'm not like putting all my eggs in that basket of the whole stock market's going to crash next week. And like, so we have money in stocks and we're going to continue to. And even if it does crash, we're not going to pull it out because we're long-term investors. We're playing the long game. And we've seen the history and how things have played out over time in the U.S. stock market. Been a lot of crashes, a lot of drops. And anyway, and so gold's no different. It's like there's a lot of ups and downs and variability and reasons why, the market might pull back on it. But like we're still continuing to buy heavily based on this concept that I just talked about in here and why I think this was a big aha for me. So anyway, there is your, money tip for the day. Maybe we can call it that. Yeah, whatever. But yeah, again, we'll have the link to the website down below. It's called One Gold. And they have an app. And again, there's other ones out there. That was just, like I was saying, the one I like the best and explained why. So yeah. So hopefully this is helpful. If you've ever considered investing in gold, or maybe you were like me where you're like, I just don't see the point. Hopefully I gave you some reasons why. I don't know.
It's worth looking into.
Yeah. Maybe.
Okay.
Your choice. Linda's like, choice. I want some gold jewelry now. Let's invest in gold jewelry.
I need a lot of gold jewelry.
Yeah. Anyway. All right. Well, thanks for hanging out with us today, y'all. Have a great rest of the day, and we'll see you next time.
Yep. See ya. I thought it was the best combination of personal finance and the Christian faith that I've ever read. This is what James said after he read our book, Simple Money, Rich Life.
And did you know that you can get a copy of this award-winning book for free?
You can get it on Amazon, but we so believe that the church needs this message that if you can cover shipping, we'd love to cover the cost of the book and send you a free copy.
All you need to do is go to seedtime.com/free to get yours.